Hello, everyone, and welcome to our webcast this afternoon for those on the East Coast, and good morning to those on the West Side. Just a few housekeeping items before I do turn the floor over to our moderator today. At any time throughout this live event, you may submit any questions via your question tab within your GoToWebinar control panel. These comments or questions will be addressed by our moderator and panelists during the designated Q&A, if time permits. This presentation is being recorded, and a link to the playback will be distributed to all attendees post-webinar. Any opinions presented in this webinar are those of the instructors and speakers and do not represent the official position of the firms the individual panelists represent or the American Society of Appraisers. I'd like to now welcome our moderator, John Russell, Senior Director of Government Relations and Business Development for the American Society of Appraisers. Thank you, John.
All right, Cynthia, thank you so much, and thanks to everyone who's joined us this afternoon for our update on everything going on driven by COVID-19 and its effects on the appraisal profession and those who rely on your work. Thanks to all of you making the time to join us this afternoon. We've got a great panel. We have a lot to get to, so we're going to dive right in. Just really quickly, two key points. As Cynthia has indicated, there is an opportunity for question and answer at the end. Please start putting questions as you have them into the questions tab, and we'll address those toward the end of today's webinar. Also, we provided you with 3 handouts in the handouts tab. These all have very useful information, and we'll go into more detail than we'll have time to cover today. So please make sure you've taken an opportunity to pull those handouts down so that you have them available after the webinar concludes today. With that, let me introduce you to today's panelists. Speaking first will be Stefan Frericks, who is the Government Relations Consultant to the American Society of Farm Managers and Rural Appraisers. Stefan, thanks for joining us today. After Stefan will be Greg McHenry, the President-elect of IAAO. He is an appraiser with the Riley County, Kansas Assessor's Office. Greg, thanks so much. Bill Garber, the Director of Government and External Relations with the Appraisal Institute, will be contributing as well on today's webinar, so thanks to Bill for that. And then lastly, myself, I'm John Russell, as Cynthia indicated, Senior Director of Government Relations and Business Development for the American Society of Appraisers. We're each going to go through. We have a section that we'll each be presenting to you today, and then a couple of things we'll hit together, and then we'll have time for Q&A. But with that, let's just get going. Stefan, I will toss it to you as we go into an overview of federal and state responses.
Great, thank you, John, and thank you to ASA for hosting this webinar. If you could advance to the next slide, please, John. So, as John mentioned, we're going to take different sections. I'm taking the federal and state response section. If you want to go to the next slide, John. As John said, I am a contract lobbyist, a contractor with the American Society of Farm Managers and Rural Appraisers. I am based in Alexandria, Virginia, so I'm just outside of Washington, D.C. You want to go to the next slide, John?
Stefan, which slide are you seeing? Because you should see on federal guidance and support.
I'm seeing the overview slide.
Interesting. Give me one moment here. All right, are we good now?
There might be a slight lag. There might be a slight lag. We're looking at the federal guidance support slide.
Yeah, that's what I'm seeing too. Try rocking it back and forth here for you.
Okay. So on the, now I've got the map. Anyway, I'm going to go through, I pulled it up, but so I'm on the emergency response in the U.S. slide. So I want to just, if nothing else, leave you with this, that the way the United States responds to emergencies is and natural disasters is that it is locally executed, locally led, if you will. It is managed by the state and supported with federal guidance and support. So the federal government does not directly control what happens in the states. I'm sure you guys are all aware of that. and they provide guidance and resources. Now, the states largely follow the guidance, but not all of them in the same way, and so you're seeing this disparate response so far. But usually the way we handle emergencies and natural disasters in the U.S., you're going to see a more consistent approach because the disasters are localized, tornadoes, flooding, or hurricanes, if you will. And that's because you have a limited number of states and jurisdictions that are affected by the natural disaster. The nature of this pandemic virus is that it's impacting all of us, all U.S. jurisdictions, but with a different degree of severity. And that has led, of course, to the varied responses across the states and local jurisdictions. If you could go to the map, the county-based map, John. So the counties, this map, I just pulled it up on Saturday, and it's a binary map, whether a county has a case of COVID-19 confirmed or not. It's broken out between metro and non-metro. And you can see, obviously, all of the major metropolitan areas that are in orange have at least one case. But there's a great part of this country, swath of the Great Plains, if you will, from central Texas all the way up into North Dakota, Montana, and Wyoming, where there are no confirmed cases. So, you know, we've heard the president talk about, well, maybe he should move to a more regional type response. And I thought this map was a good illustration of the fact that this virus, while it's impacting all of us, it's not impacting all of us at the same time or at the same rate. So if I'll go to the next slide, John, the federal guidance support. So at a real high level here, I'm not going to talk about everything the federal government has done, but on March 15th, President Trump and the Trump administration issued their coronavirus guidance for America. I actually got a postcard in the mail. It's dated March 16th. On the front, it says President Trump's coronavirus guidelines for America. And then on the back, it's got a list of things that they're recommending that you do. This was the start of the social distancing guidance, if you will. And the very first bullet that it says on the back of the postcard is listen and follow the directions of your state and local authorities. So even the federal government, this is the way that they're responding, is through the states and local governments. The other thing that this triggered was the Department of Homeland Security issued guidance within the social distancing direct order for critical infrastructure workforce guidelines. And I'll talk a little bit more about that a couple of slides later. The president also triggered a national state of emergency, declared a national state of emergency on March 15th. This triggered $50 billion in assistance to states and territories. This is primarily delivered through FEMA and went to largely to healthcare workers, hospitals, so on and so forth. Congress also stepped in with action in March. They passed 3 emergency supplementals. First one was passed on March 6th, was about $8 billion worth of emergency spending. The second one on March 18th dealt largely with emergency paid leave and some those type of issues. Then the big one that passed, the third emergency supplemental last Friday in the House, the president has signed it, and John's going to get into some of the details a little bit later. That was passed on March 27th. That's the $2 trillion bill. We are expecting a 4th emergency supplemental at some point. Congress is currently not in session, but that doesn't mean they aren't working. House Speaker Nancy Pelosi has come out and said she's already starting to work on a 4th package. The 4th package will likely focus on recovery more than responding to the current crisis. So I'm going to move on to the next slide, John. That's the high-level federal response, if you will. The states have responded at different times during different things. You have all states and territories have declared a state emergency and public health declarations. As of last Saturday, I know there are more states now, but as of last Saturday, 18 states have requested major disaster declarations from the federal government. At that time, 13 had been approved. I know more have been approved since the last Saturday. Basically, that's triggering additional monies to go into the state from the federal government. 31 states and territories, Virginia and Maryland were the most recent yesterday, have issued stay-at-home orders or stay-safe orders. And I'm not going to go through all of them here. Not all of the stay-at-home orders apply to the entire state. Some of them only cover several counties within a state. Others only apply to a certain age group. I would encourage all of you who are in these states with stay-at-home orders to read your stay-at-home order. I'm going to go to the next slide, John. We have additional responses. 19 states have limited gatherings to a maximum of 10 people. Virginia and Maryland were in this category until yesterday. And then we have a couple other states with different approaches, a maximum of 3 in South Carolina, 5 in American Samoa, 25 in Alabama, and 50 in North Carolina. If you go to the next slide, John. So if you're in a stay-at-home ordered state, what does that mean? Does that mean you can work? And I know a lot of you have been looking at this, struggling with this, trying to figure this out. Within the federal guidance, which was issued by the Department of Homeland Security, there is a requirement that if you work in critical infrastructure industry, that you have a special responsibility to maintain your normal work schedule. Every state that has a stay-at-home order has provided a list of exemptions for those people who are considered to be in critical infrastructure, doing critical infrastructural work. Some of them follow the federal guidance from the Department of Homeland Security. Some of them don't as directly. Now, the Department of Homeland Security's initial guidance that came out, it was a little fuzzy whether the appraisal industry was considered an essential critical, part of the essential critical infrastructure. They have subsequently issued updated guidance, and that's in part of the packet, information packets that we've provided. And the updated guidance from Homeland Security provides that residential and commercial real estate services, including settlement services, are to be considered essential critical workforce, part of the essential critical workforce. Now, this guidance came out last Saturday. Many of the state orders were drafted and written before the updated guidance. They were based on the old guidance. And I want to give a shout out to the Appraisal Institute, Scott Biasio. I hope I didn't butcher your last name, Scott. Scott has been tracking these state orders. He's got the summary sheet of them up on the Appraisal Institute's website. It's also, a link is provided in the PDF packets that we've given as part of this webinar, where he's pulled out each of the state orders and the specific language regarding the appraisal exemption. Some of the states specifically call out appraisers as part of the critical infrastructure exempted workforce. Others, you got to kind of read between the lines. We as groups all on this webinar, plus the National Association of Realtors, sent a letter to the National Governors Association and federal government and others last week. We sent a joint letter requesting designation of real estate appraisals as essential services because the initial guidance that did come out of Homeland Security was a little fuzzy around that issue. I also have other clients in the ag and food sector. They've been having the same issue as you as appraisers are facing. Are they part of the critical infrastructure? What does that mean? And really, at the end of the day, you need to read your state orders, and I'll go to my next slide, John, or your local orders. There are, according to the National Association of Counties, there are 127, I think, counties as of this morning that have issued stay-at-home orders. So some states actually, like Texas, are taking the approach that they're leaving it up to the county. Some states have a state order, and then the county may issue an order, or the city may issue an order. So you have cities and mayors issuing orders as well. So really, for you to determine, can I go out and do the work at all, you need to make sure you're checking these state and local orders. One final point I'll make, and it's a question that I've gotten a few questions on, is, okay, I'm in an area, state, city, county that has issued a stay-at-home order. I think I'm exempted. It's pretty clear I'm exempted. I'll go out to do my work. Do I need to have any kind of special papers, credentials with me in case I'm stopped by the local police? And I don't have a good answer for that. I have not heard of anybody being stopped. Bill tells me that he has, and Bill's going to talk a little bit more later about, so I'm kind of addressing the question of, can I work? Bill's going to talk about how work might be changing based on, or is changing based on regulator and lender input. But this question is more, okay, I've determined I can work. Do I need to have credentials? My advice, I guess, is, and I know that Farm Service Agency is issuing letters to their contractors to take with them to show that they're exempted in case they are stopped. My advice is at least take a copy of your state or local order so that you can show that, yeah, you've looked at it, you think you're considered to be exempted, and maybe a copy of your license or something else. The state of Virginia, when they went to the stay-at-home order, the governor specifically said they weren't going to have the police stopping people. The state of Maryland, it's not as clear to me. So again, it's a state-by-state approach in terms of how they're enforcing these stay-at-home orders. And with that, I'm going to stop and turn it over to Greg to talk about assessor issues.
All right, thanks so much, Stefan. And Greg, if you can dive in and give us an overview on what those of you in the assessor community are having to grapple with at this time.
Sure, and thanks for allowing IAAO via me to participate in this and kind of give a mass appraisal perspective on the issues that we're facing. And we're going through many of the similar things that you all are in the private sector. And I'll just talk briefly this afternoon about some of those issues, practical things that we're facing and looking at on the assessment industry side of things. First thing you would probably notice is that many of our jurisdictions are either closed to the public or closed completely. It's probably more common in the Midwest that we are closed to the public but still working in some fashion, whether in the office or from home, and more common on the West Coast and East Coast in the higher population areas where some of the major hot zones are, that they are closed completely. Offices like mine which are closed to the public, may be answering phone calls, and they're likely still answering emails and other questions that might come up for their information, their data, etc. I would remind everyone that real estate data is available online, probably in most cases, through your local county or township or city. And you can always contact assessors via email, see if they're open, what they can provide. And we would just ask that you be patient with those requests as we're all going through changes almost daily together as everyone else is. Many of the jurisdictions set their real estate values as of January 1st. Most of us, all of us, set it as of a particular date. January 1st is probably the most common date, whether that's annually, every 2 years, etc. That means most of us are in the midst of mailing out those 2020 valuation notices. We're holding valuation appeals, certifying values, and those are things that we have to do per state mandates. So we're on deadlines and timeframes to do those. We are changing the way that we do some of those processes. Most of us are probably holding those informal level or first level appeals solely by phone. And that's a change for our property owners, for tax reps, and for assessors as well. But in most cases, I think we're able to accommodate those appeals via that method. We're also not able to review or inspect properties on site in areas where there are stay-at-home mandates. So we're requesting photos along with other pertinent information to be emailed to us. And that's slowed, in our case, we've seen that slowed down the appeal process somewhat, but still been a pretty effective way to do those property valuation appeals. The stay-at-home mandates also present some challenges for doing sales verifications and annual property reviews. Instead of visiting the property and verifying property characteristics on site with an owner, we're relying more on oblique photography, including doing exterior measurements via the oblique photography. We're attempting to verify information even more through additional calls to buyers, sellers, brokers, agents, abstractors, lenders, just whoever we can reach that might have been involved in that transaction, so we can verify the terms of the sale and just what was involved in that transaction. We know that information obviously is important to folks outside the assessment industry as well, so we're doing our best to try to keep those updated and accurate. In many cases, I've talked to assessors who are updating their photos, which you would see on their websites in many cases, by doing an exterior photo from a street view, generally just from the front of the house or the commercial building. We're not, due to the stay-at-home rules, we're not, approaching the property and talking to someone otherwise. And we'll likely use that same process for those annual property reviews that most of us face during the summer and early fall. Assessors are fully aware of the needs to keep our real estate data updated and accurate, even with the challenges of the COVID-19 situation. We know how important that is, our data is to the real estate community, realtors, appraisers, lenders, abstractors, etc., and in addition to the public. And we are trying to keep our records updated and accurate and timely as much as we can, and available as well. Some jurisdictions are providing even more information via their website, in some cases social media, than they have in the past. And I think that's great, and probably something that will be continued beyond this crisis. But again, if you have questions, try to email or contact your local assessor if you're needing something and if you're not sure how to get it or it's not obvious to you where it might be. Most of us are also still on state mandated deadlines for our appraisal processes, assessment processes. It is challenging in our world to kind of work for two bosses. We have state oversight agencies that are ensuring that we're meeting all the state mandates and using correct assessment and appraisal practices. And most of us are following IAAO's standards, as well as obviously standard 6 of USPAP. So they're measuring our ability to do that and auditing our sales, et cetera, in most cases. And at the same time, we're working for local county commissions and boards of townships and our local government agencies. So we're trying to kind of serve two masters, but we realize again that our first mandate is to meet those state mandates and deadlines, even with offices closed, with staff on administrative leave in some cases, the inability to meet people, et cetera. Some of those state oversight agencies have been discussing moving those deadlines and or providing some flexibility in the processes we use. We're in my state, Kansas would be an example. Our state property valuation director has had a couple of phone calls in the last 2 weeks about that very subject. And I think you'll see that some of those deadlines might be extended for at least some of us across the country. Another area that has been a little bit concerning has been the higher level appeals beyond the local level that have been rescheduled due to stay-at-home mandates. And it can be frustrating for property owners, tax reps, and assessors who are involved in that appeal and are needing results. It could also have an indirect impact to revenues to local units of government if those appeals are held 6 months later, 9 months later, a year later, as an example. In many cases, if there is a change made in the value as a result of the appeal, there are refunds that are paid in addition to the adjustment on the tax bill. So that's concerning to some of the local units of government, school districts, cities, counties. Assessors, just like the private sector, are needing education programs for their licenses and designation requirements and to meet continuing ed requirements. IAAO is really the sole source for most of us and the leader nationally and internationally for mass appraisal education programs. And we are rapidly rolling out new delivery methods and updating courses for online, cohort online, self-study, and our latest new program, which would be online live, basically an instructor teaching the class live with every student participating via Zoom. And we're right now we're on a schedule basically rolling out at least one new course a week. So we realize that's a need, and we're trying to meet our members and assessors' needs for all those types of things. We're also very aware of the perceptions that some have in the public already that the 2020 values should be adjusted because of the current situation. And again, unfortunately, our values are set as of one date each year, and typically that's January 1st. When markets change after that date, up or down, it doesn't have an impact until potentially the following year. So that's put us in a kind of in the middle of a bad situation with property owners and the general public suffering economically and wondering how they may be able to pay their property tax bill when it comes later in the year. There are some states who are already talking about potential property tax relief programs that would be applied to the property tax bill, and I suspect we'll see more of that down the road in the very near future. But just to kind of remind people, our values are typically set once a year, and it really will not have an impact on those tax bills through the valuation, at least for 2020. And with that, I'll wrap it up. And I know there are a lot of private sector folks on the line who would really like to hear from the rest of the panel, as they have some great information coming to you.
All right, well, Greg, thank you very much. And I think you provided a lot of great perspective for folks on what the assessor community is going through, and things certainly if you're going to be doing tax appeal work on behalf of individuals, some of the things that they'll want to consider and think about working with the folks on the assessor end. So thanks for bringing that along. Going to turn now over to Bill Garber, and Bill is going to give us the latest developments in terms of what's been going on in a very I'd say, fast and frenetic 2 weeks here in and around the DC area and elsewhere. So Bill, I'll hand it over to you.
Thanks, John, and that's well said. I'd just like to thank my colleagues for the ease in preparation of today's webinar. We are living and breathing today's events, and so this was one of the easier ones to prepare for because we're just trying to relay information as it's coming to us and share that with our respective memberships. I'd also like to thank the leaders of the respective organizations for working together and seeing the wisdom of collaboration in the times of crisis and need today. And with that, I'm going to jump in, just sort of level set. We began to hear very quickly from the enterprises and agencies involved in real estate finance that policy changes were being contemplated and were necessary to address some of the health and safety concerns resulting from coronavirus. And I think, generally speaking, the agencies and enterprises should be applauded for the fast work that they've done in pivoting and providing greater flexibility to the marketplace as far as the inspection processes are concerned. It really took just a matter of about a week or so from directives from regulators to the enterprises for a policy to be developed, and generally one that's thoughtful in its approach and providing necessary flexibilities to the user community, end user community, to relieve some of the concerns or obligations relating to interior inspections. And we've seen that policy now. We're beginning to digest it, and as we're talking and having interactions with the enterprises, Fannie Mae and Freddie Mac, they are indicating a level of general comfort with the initial release, but they are expecting there to be some clarifications of policy forthcoming over the next several days. We can expect to see some new clarifications relating to new construction in particular, and some potential changes or tweaks in some of the programs that support energy efficiency improvements. And I'm also aware that there's some concern about completion reports or certification for repair requests being delivered to appraisers to resolve, and I understand that some guidance will be forthcoming from the GSEs shortly to make it clear that appraisers should have no role in those certification requests that may be coming from lenders. So that's a lot to say that the guidance that's come forward from the agencies and enterprises is being digested, and we can expect that there'll be some clarifications of policy and modifications where necessary going forward. And why don't we go ahead and jump on in here? Go ahead and, if you can, advance to the next slide. So let me first just make clear that please refer to all of the associated documents for official interpretations. The guidance and mortgagee letters and lender letters and bulletins are the official source for this material. I would point you to the recent released FAQ that was released from Fannie Mae and Freddie Mac, was updated last Friday. It is available in the additional resources links as well. That's a very important document to follow and track. It will be updated. It may be updated as early as this afternoon and there forward. I'm not going to go through the FAQs in their entirety. They deal with a whole range of issues. There were a couple that were updated as new FAQs last Friday that dealt with a range of issues, such as whether lenders need to document whether there were attempts made to obtain traditional appraisals. The GSEs have indicated they do not need to do that. There's guidance in there relating to shelter-in-place orders and how to treat those, and everybody needs to be respectful of shelter-in-place orders, particularly at the local level. There's guidance relating to the use of extraordinary assumptions in the GSE space, and Fannie and Freddie have indicated they do not want to see extraordinary assumptions, that appraisers should rely on the data that they have, and they want appraisers to be utilizing any number of data sources to do their research, and to not complete the assignment if they do not have or are not able to secure adequate information. There's another new FAQ relating to operationalizing loan-to-value ratios within the lenders. Essentially, as this is a hot, fast-moving situation, how do you establish LTV? And they've given some guidance to indicate that you can use sales contract prices from an internal lender standpoint. And the last new FAQ from Friday relates to the allowance for, or the authorization to do desktop appraisals under USPAP, and they've made it clear that the reference work from the Appraisal Foundation, that it's not a USPAP violation to complete a desktop appraisal. So again, check the FAQs, read the guidance, the lender bulletins, and the official documents from the enterprises for all of the latest information on their policies, which right now they are viewing as temporary relief measures that run through mid-May at this point. We'll see where they go and how the virus, we're contending with it at that point. Adjustments will likely be made, or extensions and the like. That's a decision for a future date. But please consult the operational documents for official interpretations. If we can go to the next slide. So there's various loan guarantee programs, of course, that are also adjusting policies, and they too have been very thoughtful in their approaches and very swift. All things considered, it's not easy to move policy changes through a federal agency, particularly when there's a whole host of other concerns at play. But FHA has issued, as of last week, a new mortgagee letter 2020-05, which are also in the resource materials. They too are moving to an optional exterior only or desktop only approach. It's similar, not exact, to what Fannie Mae and Freddie Mac have provided, but consult the mortgagee lender for more information. Exterior only appraisals are allowed for several of the refi programs, but they're not allowed under cash out refis or the 203K program. And one thing of note, a difference in stance from the GSEs is the FHA allows for appraisers to utilize an extraordinary assumption where it's necessary for credible assignment results. The Veterans Administration issued Circular 2620-11 last week as well, and it's allowing for a broader use of exterior inspection appraisals with enhanced assignment conditions, or in limiting instances, a desktop allowance. They too are allowing for appraisers to stipulate an extraordinary assumption within their policies. And lastly, the Rural Housing Service issued a stakeholders announcement for purchase and refis, and they are allowing for exterior only. It is accepted where interior inspection appraisals cannot be completed. They are not available to new construction or construction to perm loans at this point. If we can go to the next slide. There are some other agencies and enterprises really moving outside of single-family residential, but into some of the business development or in commercial financing situations. The Small Business Administration is a small business supporting entity. They have a couple of different loan programs. Their SOPs currently require the use of an interior inspection appraisal. And we understand that the agency is evaluating those policies today. Nothing has been released at this point, but we understand the agency has been looking at this along with any number of other loan program matters that are now before them. The SBA is one of the central agencies that's involved in the emergency relief legislation that was just passed and enacted into law. So the SBA as a whole is an extremely busy entity at the moment, and I would not expect to see a policy coming forward on this specific to appraisal, at least in the short term. So we are left to try to deal best case scenario. Essentially, I guess my advice would be to be talking with your lender clients who are in theory, they are communicating directly with local SBA offices for particular guidance. So it never hurts to consult and increase your communication with your end users until there's a more formal policy that's put in place. Similarly, there's some multifamily programs that are supported by enterprises and agencies. I'm going to talk about Freddie Mac and the HUD programs in multifamily. I understand that there's a policy under review from Freddie Mac, so we may be seeing that in short order. I do expect that it would address some of the inspection issues as well. So we'll see some official guidance from them, I think, in a short period of time. Informally, there are some suggestions that are being conveyed to the appraisal community that I've tried to glean at least. And first of all, everyone needs to be safe. And in the situation with Freddie Mac, they do appear to be using and allowing for the use of extraordinary assumptions where necessary. Appraisers should be telling their client and the reader of the report what they saw, what they didn't see, what you didn't see, and what mitigants did you use to develop a credible opinion of value. And there's a real emphasis right now on moving away from boilerplate within the Freddie Mac space. They don't want to see boilerplate or one paragraph summaries or one size fits all reports. They want appraisers to be clear about what they did and what they didn't do, that the appraisers are discussing what they did in their scope of work, and they're discussing that with their clients. Another point and suggestion, given the potential uncertainty about the current financial and transactional markets, Freddie expects the appraiser to provide sufficient discussion, data, and analysis to help them understand the risks in multifamily valuation in today's environment. In addition to the historical market data typically provided in appraisal, Freddie expects the appraiser to also rely on and document discussions with brokers, investors, borrowers, owners, and others to provide color around the status of the local multifamily market and how it relates specifically to the subject property. I think this is a theme that we're going to see and hear a lot of in the coming weeks and months. There is a heightened need to understand value questions in the market today, and this is the time for appraisers to shine and to provide that kind of color and transparency to the marketplace. So doing that research and that market analysis is critical. in today's current economic climate. Pivoting to HUD, I do not expect to see a policy from HUD to be released. I think there's some informal communications and expectations that are generally understood in the HUD community. They have a fairly robust handbook that they deal with, and those that do HUD multifamily work are familiar with the process and procedures. It can be a rather rigid process, but the appraisers, it doesn't hurt to be, again, talking to your clients. They should be talking to local offices, the local HUD offices and the like. And to sum it up, they want appraisers to identify property issues and report those. Going through some things that we've gleaned, to the extent that the contracted appraiser cannot physically inspect the site, then the appraiser should contact a local or appropriately credentialed appraiser to perform the site inspection in his or her stead. In this situation, the report must identify the appraiser conducting the site visit, their credentials, and a certification regarding the limit of their inspection, if any. Regarding internal unit inspections, USPAP does not require an inspection of individual units unless doing so would be necessary for the appraiser to achieve credible valuation conclusions. Similarly, HUD's position is that an interior inspection is customarily part of the scope of work per their MAP guide requirements, as this practice helps to ensure the reliability and credibility of the resulting appraisal report. When appraisers are unable to inspect units on site due to COVID-19 concerns, they should consider the following options in order to support their value conclusions and to ensure the reliability and credibility of the resulting appraisal report. Conduct inspections of models or vacant units using construction drawings or other available documentation to supplement their physical inspections. Use of information from CoStar or other services and other available documentation to supplement their physical inspections, or any previous inspections should be noticed if applicable. Getting all sources of information used for valuation purposes must be documented, and multiple sources of information on interior site conditions are preferable to enhance the reliability and credibility of the valuation in lieu of an actual physical inspection. Appraisers and lenders should contact the field office that will be processing the application for additional guidance. And lastly, we are aware that the USDA Farm Service Agency has decided to prohibit interior inspection appraisals rather than just waive the requirements. There's a letter that I think Stefan previously referenced that that they've provided a letter declaring an appraisal work as essential in a case of shelter-in-place directive. It sounds as if these are issued at the state level. And as Stefan was saying, there's an example of something that can be provided to the appraiser to document essential work. And it's been provided as a suggestion under the USDA Shelter-in-Place Employees and Contractors document as an official title. So move on to the next slide. And lastly, the Federal Financial Institution Examination Agencies, or the federal bank examiners, have issued their own sets of guidance. I would expect more to be forthcoming in the current environment. They've issued FAQs relating to communications about inspections between lenders, banks, and appraisers. There are some higher level documents and some changes in policy, liquidity in the marketplace for certain Secondary market activities, including commercial mortgage-backed securities. There's an effort by the Federal Reserve to secure the liquidity of certain sectors in the real estate marketplace. There's guidance that's been issued on loan modifications. Essentially, the examiners are encouraging lenders to reach out to borrowers and try to find solutions to avoid foreclosures, evictions, all of the negative downward effects that we might see in current circumstances. So we're working with borrowers. And we do understand that the agencies are contemplating additional guidance relating to appraisal inspections. While there's not been, the policy is pretty thin from the federal bank examination agencies on appraisal so far, the commercial banking community as a whole was pretty quick to act as far as developing alternative inspection approaches and regimes. We saw major commercial lenders issue changes in work requests actually prior to all of the enterprises and agencies issuing their policies to provide for alternative means. So we're seeing a lot of development there. I think that's going forward. What are we going to see and hear? Certainly use of technology, some of the advanced tools that are available to do inspections, virtual inspections, and the like are fairly enlightening and are potentially enhancing some of these processes. And I would expect quite a bit of a discussion between service providers and users in and around this over the coming months. Technology is here and it's going to be used in a wide range of functions, and I think actually can enhance the work of appraisers in many instances. So we are expecting, again, some additional guidance from the agencies on inspections, but absent from that, we're already seeing a lot of commercial banks move to incorporate different work request arrangements. So with that, I'm going to hand the baton over to John to talk about some of the emergency relief measures as it relates to small business.
All right, Bill, thank you so much. And I'll pause for 20 seconds to underscore two big points you made for our attendees today. One is that the guidance that exists today is likely to be augmented, changed, added to, retracted on a very dynamic basis. So please be mindful of the need to check for updated documentation from any of the entities for whom you will be adhering to their requirements for your work. What we've provided you today is really just a snapshot in time in your handouts tab. It's very robust and it will cover a lot of the waterfront today, but do make sure to stay up to date on what's changing. I know as we sit here and talk, I think in mere minutes, in fact, there will be more guidance coming on new construction appraisal, for example, from the GSE. So definitely just make sure that you're checking that documentation. And in particular, as Bill indicated in the additional resources document you have, we've provided a number of links that will stay up to date. So those would be good places to check as well. With that, turning to resources for you as business people and as small business people, I know there's been a lot of conversation within ASA as well as with others in terms of what this means to the business side of appraisal. So I'm going to take some time now to walk through some different avenues of relief that will be available to you. Some are available currently, others are still in the process of being stood up, so are not available today, but will be available shortly. I want to start by looking at the different SBA programs, because SBA certainly has the widest range of options, and certainly things like paycheck protection have gotten a lot of attention coming out of that third stimulus bill, but there's other avenues that are available to you as you look at ways to hang in there as a business person. Before I get into these, again, really quickly, because I'm big into disclaimers, this is informational only. This is not financial, investment, or legal advice, so I must tell you to please consult with your accountant or attorney for additional information. You'll also find a similar disclosure on the more robust document in your handouts tab, and that has some links provided as well and more detail. So let's talk first about economic injury disaster loans and loan advances. This is a good frontline tool for those of you who maybe are seeing a downturn in orders coming in and the ability to meet the needs of the orders. Certainly, I'm seeing a lot of questions coming in about the inability to get into the interior of the property. So the economic injury disaster loans, they can provide relief from economic injury that's incurred as a result of COVID-19 or any disaster. You know, typically this program would function around hurricanes, tornadoes, things of that sort, but it also applies here during COVID-19. So those disaster loans can provide up to $2 million in relief at a rate of 3.75%, repayment windows up to 30 years. But more importantly, there's the availability of a $10,000 injury disaster loan advance with those funds available 3 days after completion of an application. So as a first bite at the apple, if you're suffering economic injury because of COVID-19, you can go seek an advance from SBA up to $10,000 and then a further loan with fairly favorable terms in that regard. Pivoting over to the 7A loan program, you might already be familiar with 7A and its general applicability for small business. Currently, SBA is paying the principal and interest on 7A loans for 6 months. That's both for existing 7A loans as well as those that are originated prior to September 27th of this year. So if you do a new 7A loan, there will be some deferment or payment of that loan on your behalf by SBA. And those are usable across a wide range of different expense categories, from working capital, expansion, renovation, construction, purchase of land, buildings, equipment, fixtures, leasehold improvements, seasonal credit, refinancing of debt, inventory. There's a whole list of ways in which 7A financing can be used. So even though the economic injury disaster loans, paycheck protection are likely to get a lot of attention in this time, I'd also encourage you to consider the 7A program as well if you're looking for another avenue of potential economic relief. After that, we have the Express Disaster Bridge Loan and Express Loan Program. So for those of you who maybe aren't familiar, in the Express Loan Program, you can get loans for up to $350,000 for terms up to 7 years with a revolving line option, typically with a turnaround time of 36 hours. So very fast from application to approval. If you already have a relationship with an express disaster or an express lender rather, you can get an Express Disaster Bridge Loan for up to $25,000 for bridge financing from SBA while you await a decision on an economic injury disaster loan. So if time is of the essence for you for any reason, you've seen a severe downturn in orders coming in or something else that's impacting your business's cash flow, those Express Disaster Bridge Loans are available if you have an existing relationship with an express lender. All right, turning now to, I think, the one that's gotten the most attention coming out of that third stimulus bill that was talked about earlier are the paycheck protection loans. SBA will do loans with up to 10-year terms with interest rates at or around 4% for small businesses, and that's defined here as fewer than 500 employees. And that loan can be up for up to $10 million. But the interesting thing about the Paycheck Protection Loan Program is that you can get deferment for 6 months to a year, and the loan may be forgiven if you've maintained your payroll for 8 weeks and used the loan to pay for that payroll expense as well as other expenses of maintaining the business. Currently, SBA does not have that program up and running fully. They expect to have it up and running fully very soon, and they'll have more guidance around that when it comes out. But it's certainly a very different kind of lending avenue for SBA, especially with a focus on keeping your employees, if you're an employer at a small business, keeping your employees on the payroll and keeping them active. Just other loan vehicles that SBA has, probably not as relevant in our current situation, but just to be aware of them in case they are applicable to you or your situation. Community Advantage loans, the 504 program, and micro loans available through SBA. All right, turning now, we're going to take a look at some tax issues and unemployment benefits. These are two other areas of potential relief. Now, starting on tax, many of you are probably aware by now that the deadline for the filing of your 2019 tax returns has shifted from April 15th to July 15th of this year. Also worth pointing out that any payments, both estimated tax payments and annual tax payments up to $10 million that would have been due on April 15th, those have also been shifted to July 15th. So if you're looking to shore up cash flow in the short term, the tax bill is not due in 15 days, it's due in about 4.5 months from now. There's also the ability to defer the payment of payroll tax in 2020 and instead shift that payroll tax payment out with half in 2021, the other half in 2022. So not only can you shift looming general tax payments, but payroll tax payments as well can be shifted. Last but not least, there is the ability, if you suffer a net operating loss here in 2020, the law had been changed in the Tax Cuts and Jobs Act, the TCJA, on the net operating loss carrybacks. Those have now been reallowed under that third stimulus bill. So if you do recognize a net operating loss this year and you want to go back with that loss and claim it against the prior year where you had taxable income, taxable revenues, you'll be able to do that. I'll definitely encourage you on all the tax issues. Again, consult with your accountant or CFO for more information. Maybe the biggest thing to know about in the wake of that third stimulus bill is the extension of unemployment benefits and the fact that for the first time, we are going to see unemployment benefits apply to both the gig economy as well as those who are self-employed. Really, it's something that we've not seen previously. It's something that's going to be a little bit of a little tricky to navigate, especially because of its being effectuated at the state level. So a couple of things to know. One is that unemployment insurance has been expanded from 3 to 4 months of coverage, and it will provide temporary additional compensation of $600 per week in addition to and at the same time as your regular state and federal benefits. And as I mentioned, part-time self-employed and gig economy workers have access to these benefits. Now, one word of caution here, if you're thinking of taking advantage of these benefits as they become available in your state. The documentation requirements are going to vary from state to state. So please make sure that you've checked what your state would require of you to take advantage of those benefits. Check for the required documentation, check for tax documentation that might be required for you to file as part of that claim for unemployment benefits. Additionally, furloughed employees can access unemployment benefits. We're seeing a lot of large employers. I know Macy's just did this either yesterday or today, but where they're furloughing the workforce, those furloughed employees are able to access unemployment benefits to make up the shortfall during their furlough period. And there's a couple of other things related to the advance of payroll tax credits and things of that sort. Not going to get into them as much here, but just to be aware of. If you have questions on those, you can certainly, again, consult your professional. All right, last but not least, and I think this is maybe something that's getting lost a little bit in all the conversation around the federal activity, is that there's a number of state and local relief options available as well. I happen to live in Montgomery County, Maryland, so I picked on myself for the example, but this will likely be true for many of you in your communities as well. A lot of states are coming in and taking additional steps above and beyond what the federal government is doing. So for example, here in Maryland, our governor has made available grants of up to $10,000 for small businesses, so long as it doesn't exceed 3 months of cash operating expenses for what they're quantifying as small business, which is anything 50 employees and below. In addition to that, though, where I live in Montgomery County, Maryland, there's $20 million that was being made available today. They're actually voting in county council on it today to pass the program for additional grant funding of up to $75,000 for businesses with up to 100 employees and a special grant for establishing work from home setups for your employees, since a lot of us have had to go offsite at this point. Obviously, it'd be difficult in this setting to give you an exhaustive list of state and local resources that will become available. I would just encourage you, Google is your best friend sometimes. Go in and look, Google your state, what small business COVID-19 relief is available, as well as your county or your city. The ability here is that you can take what your local jurisdiction is offering, what your state is offering, and what the federal government is offering, and you've got a pretty robust set of options for getting through what is certainly a difficult time for many of us. So I would encourage you, look those up. And again, the big thing, if you're looking for that payroll protection program out of SBA, just be on the lookout. That information and additional guidance for how that's going to work will likely be coming in the next couple of days here. With that, we've kind of reached the tail end of our conversation, and I'm going to open it up to all of the panelists now, because there's a couple of ongoing issues that we wanted to discuss, things we wanted to think about in terms of looking ahead. I kind of want to, with the power of the moderator, kind of start maybe at the end there, that liability and impact. I've seen a number of questions. I know we'll get ahead of the question and answer period here, but I'll throw it out to my other participants. A lot of people wondering what potential impacts and liabilities there might be on an appraiser who's gone into a home and that homeowner has subsequently contracted coronavirus or COVID-19. Also, what might happen if the appraiser themselves is going out and becomes infected with the virus. So I'll just kind of toss it open to my colleagues here. You know, we've certainly teed that up. Any thoughts around the liability question and maybe some resources that might be out there, or folks who you think are good to listen to on this topic?
Yeah, sure, John. Bill Garber here. I mean, I think appraisers need to be extremely careful and cautious in the current environment. Everybody needs to stay safe and stay healthy. That's first and foremost, and can't be jeopardizing our personal health in a situation like this. And then we've got a greater pandemic and a greater good at work here. And, you know, appraisers for their part in this need to be mindful of that. We, of course, have essential work and flows, finances, you know, the flow of funds and availability of credit. All of these larger issues are extremely important, but there are allowances that have been provided for alternatives and flexibility for doing exterior only inspections and desktop work and the like. So, you know, as we go forward, we need appraisers. I would just suggest they be mindful, be cautious. They need to be thinking seriously about these issues. Where they have legal questions, they need to be consulting their local attorneys as well. There are a couple of very thoughtful legal leaders within the profession that we often turn to and rely on. They're generally providing guidance in the forms of articles and webinars and the like. But the Appraisal Institute's preferred errors and omissions insurance provider, LIA, Liability Insurance Administrators, has a lot of good resources available on their website, and they've provided some suggestions on limiting language and the like. So we would expect to see more from them. And also Peter Christensen, who is a private practice attorney, but well known in the industry, has published several articles and has held at least one webinar that I'm aware of, talking through a lot of these issues, raising a lot of perspectives and insights from some of the recent economic crises and how they affected appraisers and what appraisers might be looking for here as well to provide some guidance. So those are two good resources that we often turn to.
Great.
Hey, John,
yeah, go ahead.
Yeah, this is Stephen, John. I mean, I would just echo Bill's comments about, you know, err on the side of being cautious and safe. I am not that familiar with, you know, coverage packages, but I am somewhat familiar with business interruption insurance. And for the most part, pandemic outbreaks are not covered by business interruption insurance. So I'm guessing that E&O coverage, you know, probably has an exclusion for pandemics as well. And if you are able to buy something to cover you there, it's probably going to be very expensive. So I think the advice of consulting with your carrier, consulting with your attorneys about liability, that's all good, but just be super cautious at this point in time.
Yeah, I definitely think safe better than sorry in this environment is a good rule of thumb to go with. I'm remembering in our offline conversations, and maybe I'll tee this up for Greg first, since he's got a little more frontline understanding. You know, got property records access listed here. And I know it come up, I think Bill had mentioned something like 20% of the country doesn't have access to electronic online property records. Greg, maybe you can give us some insights into how appraisers might look to work with their local jurisdictions or municipalities, in those recorders' offices and the like, obviously kind of sister agencies to where you sit, but maybe some of the things that appraisers can be thinking about now in terms of getting information that they can't just walk in and get anymore.
Sure. As you said, there is a fairly significant portion. I've seen estimates of 15 to 20% of the country where local jurisdictions don't have either all or part of the property data online. My experience here has been that it's important for your local assessor to know the need. Number one, have those conversations even now with them via phone, email, however you can do that. But also afterwards, have those conversations with the local county commissioners or township boards, whoever they report to, because those are the folks that provide the resources for them to be able to put that online. And I think it can be a turning point for some of those counties and jurisdictions when those policy setters and budget providers know the importance of that data, even now and especially now in this time of crisis that we're going through. So there are software providers out there, a lot of vendors who can quickly get that data online for folks if that's desired, if that's wanted, but it needs to be a community need or a community desire from the real estate community expressed to the assessor and to those local policy centers.
Great, thank you for that. Since we've sort of backed into it here, then we'll go back up to what I think, having perused the questions throughout our webinar today, is maybe the single biggest issue out there for a lot of you, and that's the conversations that you have to have with your lender clients, the appraisal management companies, as well as the conversations that you're having with homeowners. And we'll throw it open to the group, but it seems like there's a lot of confusion out there. It's a very dynamic, fast-moving environment we're dealing with right now, but I'm seeing a lot in the questions of folks, on the one hand, looking at the Fannie Mae or Freddie Mac guidance on interior or on the desktop appraisals or exterior-only appraisals, and then on the other hand, hearing from their clients that no, they'll only take full interior appraisals. Maybe kind of amongst the group here, talk for a minute about ways and strategies that the folks listening here can have, when they have to have those conversations as the order comes in and they're kind of wondering why the relief that was touted or the alternatives that were touted is not appearing in the order stream.
I can jump in, John, Bill here. It's been interesting as we've all been doing telework and hunkering down in our various locations to kind of see all of this stuff play out in front of us, the various changes within the profession literally occurring before our eyes as we telework and communicate virtually. And we've had situations where members have contacted us to express concerns about work requests that involved interior inspection assignments, and then provided some information from recent policy announcements or other lenders who have pivoted and moved to a more flexible arrangement. And then within a matter of minutes, hearing back from them saying that they had provided it and the client was reconsidering the order and was adjusting their policies. So I think what that has illustrated to me is that right now is the time and an important time for appraisers to be communicating with their clients. They need to be having these direct discussions and engagements. They can help educate them as to what has occurred and where things are leaning, what policies, decisions that have been made already, and where these things may be headed, because it can help guide some of those discussions and help everyone make informed and better decisions. So, just right up front, communication is key in addressing some of those issues. And I think that's where I think the communication needs to be to any of the third parties who are involved in it. One of the things that we've observed is that a lot of those end user interactions between appraisers and clients, the end users, the lenders, the financial institutions, in many cases, there are third parties involved in those discussions or acting as go-betweens. So there's an additional layer that's involved where you may have an appraisal management company that's involved, and it is difficult for appraisers to have that direct communication with the end user community. But it's just as important to have that discussion with appraisal management companies and those who are involved in the engagement and review process on behalf of the end users, because they too need that education and can help drive that process of education and awareness to the end user community. I think generally that it's still very early in the policy process. It's going to take a little bit of time for everyone to digest these policy changes, but we are seeing that, I think, just kind of on a qualitative level in the last few days. We are seeing some subtle adjustments being made. So I would just emphasize, communicate with the people that you're working with as best as you can.
And maybe kind of pivoting off that, Bill, and the others, because one of the other things that I'm seeing a lot from our attendees today in the questions deals with the difficulties they're having, and certainly under the current Fannie Mae and Freddie Mac guidance on the refinance transactions, there's not as much flexibility as there is under the purchase transactions that are out there, whatever they may be at this point. The question of, can I make the decision to do a 2055 when a 1004 is ordered, or can I make the decision to use technology independently to go and access the interior using the owner as my eyes and using video streaming to get in that home? And will that suffice? And maybe kind of focusing more specifically on that specific issue for a moment. What do maybe the folks attending need to know in terms of the state of play today, and what is it that they can communicate back as part of that line of communication to the lender client or the AMC?
Well, Bill here again. It is interesting. There is a bit of what we've learned as our organizations on this call today have also been separately reaching out to our sister trade organizations in the financial sector to kind of understand some of their touch points, their concerns, what's keeping the banks up at night and the like. And we had a call yesterday with some of them, and it very clearly, the refi issue within the current policies is a point of concern for them, and they are separately pushing for some greater flexibilities relative to refi policies and allowances for enhanced allowances for exterior only and desktop arrangements there. The current policy is fairly restrictive to situations where they have information already in the loan file, GSE to GSE type of refi situation. And from what we understand in the conversations with Fannie Mae and Freddie Mac, there's the thought that went into this temporary policy. Remember, it's only going through mid-May, and it may be adjusted at that point, is that they want to make sure that they're avoiding a risk transfer from the balance sheet of financial institutions onto the balance sheet of the GSEs. So they have put some thought into their policy here in the sense of they have a more rigorous process that they're maintaining where they don't have previous information on file. Now that's creating some issues for appraisers in the sense of producing more interior inspection assignments and the like, and it's something that the organizations here have talked about how can we address and move forward with. We've shared these concerns with the GSEs, but and their response to date is essentially that they are viewing this as a temporary policy. Generally, they have expressed a level of comfort with the current policy, and I don't expect to see this within at least the short-term clarifications or FAQs that we may see from the GSEs. I don't think we're going to see anything here relative to the refi side in the next round, at least.
Yeah, I would agree with that. They sounded pretty firm yesterday.
Hey, Stefan, since I've got you there, one question that's come up is the interplay, since you covered this in your section of the slides today, the interplay between the federal, that CISA guidance and then the state stay-at-home or shelter-in-place orders, and kind of what it is that people need to be following and paying attention to. Can you maybe unpack that a little bit? Because I think there is a little confusion between the federal government saying one thing in their guidance, and then occasionally we're running into states or even municipalities where they're either not expressly addressing, real estate settlement services or appraisal services, or I know I've heard one or two examples where appraisal's been specifically deemed non-essential. So maybe can you talk for a minute for folks about what guidance it is or what orders they need to be following and where they need to be looking to know whether or not to be out there doing the work?
Sure. So the way I would look at this is what the federal government has put out is guidance. It is not binding. It is up to the state or the local county or the municipality. It's up to the state, but they may defer to the locals or the cities for their orders. The federal guidance is advisory. So I would pay less attention to the federal guidance. I mean, it's nice that we've got the federal guidance revised on Saturday to make it more clear, but unfortunately, the initial guidance was less clear, but you need to follow the state order. If the state or the local order, the city order, does not exempt appraisal work, then you are not exempted, and I think you cannot work, is the way I would view it. Now, can you get that state or local guidance changed? I guess I would reach out to your trade associations to see if they can't help with that. And I forgot to mention, Scott's doing a great job tracking the state guidance, but it's very difficult to track all the various local guidance. For example, the city of San Francisco has exempted construction work. So construction work is continuing in San Francisco. The city of Boston has not. They, at least according to my son who lives up there, and so they have shut down almost all construction. So it's going to vary by city and locality, and what you need to do is familiarize yourselves with your state, and if you do have local or city orders, that's what you got to follow. And I agree that some of them are less than clear, but usually, at least at the state level, a lot of them have some verbiage around financial sector, and you might be able to use that verbiage to read in appraisal work, but it is not a clear situation in some states, that's for sure. In some states it is. Some states like Minnesota, Illinois, Ohio, they have specifically listed appraisers as exempted, appraisal work as exempted, so you can continue to do your work. And unfortunately, that's just the way we handle these sorts of emergencies. So it's not, you could be in a situation where it is not clear cut.
So I think a quick question here, and it's a good one because I don't think we've talked about it even offline as a group or seen anything on it, but anything related to federal land acquisition work and stuff that would follow Yellow Book, I know I'm not aware of any specific guidance for that work. Is there anything anyone else on the line here amongst the panel is, or is that something where maybe we need to be shaking some trees to get additional guidance on that front? And I think it speaks to, as Bill went over in his slides, just how many different folks have to chime in with guidance on appraisals in these times and how quickly things are moving.
Yeah, Bill here. We've talked about it a little bit in the sense of the essential worker question. For one, that some of the references that you're seeing at the state and the local level will refer to financial institution capacities or professional services capacities, particularly on the financial institutions capacity or banking sector, critical infrastructure, and the like. There may be questions for appraisers who are doing non-bank work, eminent domain, right-of-way type of work in traveling under those instances where they're not doing critical infrastructure or essential work for financial institutions and the like. So that is an ongoing question. It would require additional clarification at the local level, just as Stefan was describing, on an ongoing basis. I'm not aware of any of the federal agencies issuing anything from either DOJ or from Federal Highway Administration and the Uniform Relocation Act. My sense is that the fortunate thing with a lot of that work is that it's not inspection dependent, or it's less inspection dependent than the financial institutions valuation world, meaning, there's probably flexibility with doing inspections. It may not be necessary to do it this week. That we've been looking at calendaring it in the future. And then there are these alternative arrangements too, that I'm sure that there will be a point in time where we'll be considering virtual inspections or allowances of that nature, at least for some of the preliminary research type work. That could be done with follow-up personal inspections before the final delivery of the report. So I think there's going to be any number of arrangements there that are potential or the offer potential to appraisers. But I would be mindful of that as a non-banking appraiser, that some of these orders at the local level may not be capturing you as an essential worker.
Yeah, and as you make that point, Bill, one of our attendees has chimed in and pointed out that at least in the state of New York, anything for non-financial institution purposes would be considered non-essential. So that's where that state overlay is going to be essential to know where you sit and what you're allowed to do versus not allowed to do. We're kind of coming up against the end of our time here, so I'll let each of our panelists maybe take 30 seconds and just kind of maybe one final thought you want to leave our attendees with today who have just stuck with us throughout an hour and a half, and we thank all of you for taking the time this afternoon. So maybe, Stefan, I'll start with you. Anything you want to leave our folks with here this afternoon?
Well, I guess I would just say thank you for participating in this call. I hope you found it helpful. I know that we've all been struggling to keep up with all the changes that have been ongoing, and I'm sure will continue to happen. I hope this virus starts to settle down at some point. I will share with you that my oldest son is stationed in Italy in the Army, and he is under a quarantine. He needs a sheet of paper to leave his apartment to go to the grocery store to go through checks that are both on the highways and on the sidewalks to just get around. And I hope we don't get to that stage. Thank you.
All right, Greg, anything you want to leave us with here this afternoon?
I would just like to reiterate that, assessors are here to help. We totally understand the need for our data and our information to be available and accessible among our peer groups, and we'll do anything we can to make that happen. Please do not be afraid to reach out to your assessors, however that can happen in this situation. Most have a most or all have a website and some contact info. So please try to contact them if you're needing something and it's not readily available, or you're looking for an alternative method of getting that. I'd also just put a quick plug for IAAO. Although they are not in the office, the entire staff is working from home. And so they're still taking phone calls and emails. The library is still available for those of you who access it to get information, maybe for some unique property type appraisal. But IAAO.org is the website where you can access a lot of the information that IAAO provides. But again, we're here to help, and we enjoy working with our friends and peers in the private sector, and hope to be able to meet your needs as we go forward.
Great. Bill.
Thanks, John. Really appreciate the opportunity. I would say that we're here to be a resource for the appraisal profession. Please continue to reach out and provide information that you think would have value to the broader appraisal community, or if you have a need and have a question on something, we're here to be helpful to try to source that as best that we can. It's the beauty of the professional organizations. We can all kind of share and collaborate. That's why participation in an appraisal organization is valuable, more so now than ever before. So we just want to continue with that as best we can, provide as many resources as we can to our professionals to help them be successful and really navigate some turbulent times, but one where their services are really important. They're going to be essential to moving past this in a secure and safe way, and really helping a lot of people understand what's going on in the marketplace. There's a lot of resources on our website. We did a webinar last week that talked a lot about some of the standards and methodology questions in the marketplace. And I've seen several end users reference guide notes that were discussed there, guide notes 10 and 12 in particular, which are referenced in the resource materials, and those can be helpful resources to the appraisal community as well, available free of charge.
Yeah, and thank you for providing those along. I'll just take a couple of moments here first to thank the organizations for putting this together, the leadership. You know, these are extraordinary times. I think they've shown extraordinary leadership by banding together and working in a united manner to deal with these issues. So thanks to MDREA, the American Society of Farm Managers, Rural Appraisers, IAAO, the Appraisal Institute, of course, my own employer, the American Society of Appraisers. Thanks, obviously, to all of you who've taken time today. I know that there's still a lot of frustration, confusion, exasperation out there among some of you in these times. They're certainly unprecedented in any of our lifetimes. Just rest assured knowing you have some very diligent, very hardworking people working day and night to try and get the answers that you need, the resolutions that you want, and to deal with this crisis in a way that certainly first and foremost protects your health and well-being. So I know those of us presenting today are working toward that on a daily basis, and as best we can, as things change and evolve, we'll push that information out as well. With that, thanks again for joining us this afternoon for the webinar. I'm going to toss it back over to Cynthia to close us out this afternoon.
Great. Thank you, everyone, for joining us today. As mentioned, and a big thank you to our panelists and fellow associations that contributed to making this event happen. A recording will go out shortly in case you missed anything today. Thank you all again. Have a wonderful afternoon.